Joining us now to talk about the energy markets, the head of commodities and derivatives at Bank of America, Francisco Blanch. Francisco, great to have you with us. Given the latest developments in Iran, or maybe lack of developments, does that alter your view of where crude finishes?
Well, the reality of the matter is we're expecting oil to be in the $70 to $80 a barrel range for Brent on the assumption that we were going to see some resolution. But if we don't, we're going to keep creeping higher into the winter. We have enough crude oil for now, but we have true shortages in diesel markets, gasoline markets, and also global gas. And we have some serious shortfalls in end-user products in the energy markets right now.
Do you feel like, and this is sort of asking you to be a little bit of a political pundit, but I guess that's the nature of being a commodities forecaster. Do you feel like we're in this period where oil will creep higher given the demands that Iran is putting forth at this point in terms of, war reparations and that the U.S. won't have free access to the Strait?
Well, it's a bit of a laundry list. So to the extent that the U.S. and Iran cannot come down to an agreement to allow free passage, remember, we are seeing just about 5 to 10 ships a day. We need to see about 140 to be back at pre-war levels. And frankly, to stabilize the market, we probably, because we're rerouting through Saudi Arabia and the UAE, we probably need to see 80 to 100 ships a day. So again, we need to see roughly 10 times the flow of ships to normalize prices and prevent an escalation into the winter. Yeah.
It sounds like the risk is to the upside then, to your oil forecast.
I mean, there is a little bit of upside risk. It's been on and off now for how long? But the challenge, of course, is that we've been withdrawing inventories all this time, which is what's prevented us from moving higher. So to the extent that we don't
have the inventories we used to have.
We don't have the inventories we used to have. So to the extent we don't come to an agreement, there's going to be an escalation. Yes, I think that's pretty accurate. And I think it's going to hit Europe probably more so than the U.S. Because of the exposure to particularly gas, but also Europe's an importer of a lot of fuels.
Mm-hmm. And right now, Europe is undergoing this unprecedented heat wave, which is also putting some strains on what they're paying.
That's right. There's a major heat. We're in the 5th heat wave in Europe. The Danube is the river. Well, a lot of the rivers in Europe are down. So we're having issues moving grain from the Black Sea through Europe. But also we're having major problems on hydroelectric generation. And we are seeing, importantly, lower nuclear power generation because you need water to cool the reactors. You need fresh water. And with the heat, that's becoming a problem, too. So it's kind of starting to be an issue in Europe. And we're seeing that in the price of gas, which is now $20 an MMBTU.
Wow. So is this like an energy crisis that we're facing or looking at in Europe?
I mean, if Hormuz doesn't reopen, most likely yes, because at the same time you have Ukraine striking Russian refineries pretty hard, and that's further straining the availability of diesel and other fuels. So it's kind of a bit of a combination of factors, but we have about a month and a half. But as you know, after the summer, eventually through the fall, you go into the winter, and we have essentially 2 months to prepare for the winter.
Right. We pay attention so closely to WTI and Brent here in the United States as a measure for the impact of the war. But on the refined product side, it's a much different story just because refining capacity is so limited and is so tight at this point. What is your assessment on where we are with pricing there?
So we are seeing record what's called crack spreads, the difference between diesel and crude oil. We're seeing $80, $85 a barrel. So the price of diesel alone, just the differential, is higher than the price of WTI. That's kind of never happened before, except for a few occasions. And you've seen also the price of gasoline differentials very, very high. Refining margins are record levels. And this is a combination of Ukraine striking Russian refineries, as I mentioned, the lack of vessels through Hormuz, which is a huge refining center, and also the fact that the Chinese have essentially limited their exports to the Asian countries that surround them. I remember these are 3 of the world's 4 largest refining centers, together with the U.S. of A. So the net result is American inventories of petroleum fuels are coming down very quickly as well, right? So it's a complicated backdrop.